Ladies and gentlemen, in this week's video, I'm going to share with you personally how I made 1000%. Yes, 1000% or 10 times my capital investment on technology stocks. Okay, so actually this is what I've written in this month's article, which you, ladies and gentlemen, can see and go find out at GCP Global website. Okay, do sign up, become a member, because every month we actually write the latest publication on the latest in technology as well as real estate investment trust. But most importantly is how to make your money or how to multiply your wealth consistently and safely. So in today's video, let me just go on and share with you personally how I made that 1000. And our latest article at GCP Global website is lessons learned from investing in Google, or now the new name Alphabet, since 2015 in the last 10 years. Okay, in fact, many of my tech investments have returned about 500 to 1000% in the course of the last 3 to 10 years. And it's something that I actually love very much, because in the forefront of sharing and making money, we also share with our GCP Global students how to actually embark on this journey. And we hope, of course, that you will also sign up in our YouTube channel, and then you can also embark on your journey of making consistent and multiply your wealth with us at GCP Global in our classes, in our YouTube channel. I continue to add on to my investments in Google when I first entered the stock way back in 2012. Yes, 2012. Now it's 2021. This is my 10 year of owning Google. Now this was the price chart when I first bought into Google. And as usual in GCP Global student classes, we always tell people to buy in when there's buying opportunity presented by the market. Now, in this case, Google share price then got hit because of the purchase of Motorola Mobility. At that time, I think the market was actually wrangling the fact that, hey, it's a poor purchase, because essentially, can Google do and perform well because of the assets itself? All right, so there are a few principles in today's lecture that I want to share with you. One is the fact that we like to, it's a poor purchase, because essentially, can Google do and perform well because of the assets itself? All right, so there are a few principles in today's lecture that I want to share with you. One is the fact that we like to buy into businesses that will flourish. Google was actually doing a net profit of 10 billion. All right, in a single year. That is actually in 2012. And look at Google's latest results, ladies and gentlemen. Because of the big total addressable market, or the huge addressable market, you notice that essentially just in the last quarter, Google alone did 18 billion. Now, if you calculate backwards, this means that in one quarter now, they make 80% more than what they made in a year 10 years ago. Now, this is the kind of business you want to be in, ladies and gentlemen. These are the kind of stocks you want to be in to multiply your wealth. And at GCP Global, in our classes, this is what we focus on, to grow your money steadily and consistently. Now, of course, in today's, it's meant as a sharing. It's not an investment advice, okay, but it's actually just a sharing to let you know that in our GCP Global classes, how we guide our student investors. That includes family offices, very high net worth individuals, very strong family offices, and institutional funds to actually achieve the financial planning, financial independence there is. So it's not financial advice, yeah? So the second point, ladies and gentlemen, we want to stress in underlying the stocks that we actually purchase for the long term is the fact that we want to be buying into stocks that give or have a very good brand. Now, Google has become so omnipresent everywhere that it's now become a verb, right? You no longer say that, hey, just go and Google something because you want to know something about something, all right? So it's presence, it's whole. in practically all tentacles, in all aspects of Google, from YouTube to Google AdSense to actually its various moonshot projects, have actually meant that in its basic operations, as you can see, ladies and gentlemen, right, from 2011 to 2016, remember I first bought it in 2012, you notice that the return on invested capital has always been above 15%. In fact, if you look at the previous 5 years, that is from 2017 onwards, the numbers have gotten stronger. Now, this concept of ROIC, ladies and gentlemen, is something that we, together with Warren Buffett, actually share closely, because it tells us and it shows clearly how companies are able to allocate capital, and the ability to allocate capital efficiently, to generate multi-year profits, to achieve compounded returns. That is the essential trait of being able to buy into stocks that can give you 10 times the return, as what I've done with Google, ladies and gentlemen. Okay, and this is what we stress in our classes at GCP Global. Now, we have written a lot about tech and how to multiply your wealth. For example, like in this case, keeping faith with FANGs, which we just covered in our recent tech class, as well as actually misconceptions of investing in the best of the breed tech stocks. One of the misconceptions is that because of valuation, don't invest. Now, so if you have been held back on Tesla, you've been held back on Amazon because of this, do read the article, because we have always stressed that in a long term, for outperformance sustainable, you're not looking at valuations. Valuations become a small part of the whole picture. The key picture is being able to analyze the business well, and that's what we do well at GCP Global, and we hope that you are able to join us for that. All right. Then the third point that we have in our article that we want to share today is that we love to buy into lucrative businesses. But the irony, ladies and gentlemen, is that if you want to buy lucrative businesses, it's impossible to buy on the cheap. When they are on the cheap, you notice that essentially something is really wrong, right? So it's the same case, ladies and gentlemen, when classes or courses are offered at $0, you notice that most of the time there will be an incentive to upsell you. For example, our classes, we have always held our cost constant all these 32 years, because the repeat customers, the repeat students that we have over the years are our long-term customers. Longest customer that has been with us 27 years. And we want to actually pay back and recognize this commitment, this adulation, and this strong relationship with our customers by holding our prices constant, so that every time you grow your wealth with us and find a multiplier, you notice that the cost of attending our classes remain the same and remain low. All right. So the same. So when we buy into lucrative business, we are actually very similar to what Benjamin Graham actually mentioned previously in value investing. His was a cigar butt theory, where you try to find stocks that maybe are trading just a little cheap, and then there's a little upside. For us, we really like to buy lucrative businesses at reasonable valuation. And to this extent, we like to look at not just multiples like PE or price to book value. We look at essentially, the evolvement of a business. So for example, a good understanding of this is you look at Berkshire Hathaway, or what Warren Buffett has been doing, is that, yes, he confessed that he stayed out of the dot-com bubble in 1990, but just look at his 39th filing, which is the latest portfolio filing for Berkshire Hathaway with the SEC. It shows that some of the biggest constituent in his stock portfolio is Apple, which is a technology stock, Amazon, which is also a technology stock, and guess what? Snowflake, where the PE is closer to 60 than closer to 16. All right, so you notice that even Warren Buffett modify his approach. So essentially, when we look at good businesses like this, you notice that it is almost impossible to buy on a cheap, unless of course the market crashes, like 1987, 1989 during the global financial crisis. Okay, so for more of how to triple your wealth, over a short period of time, like 3 years, which is what we did last year when we continue to do our tech classes. You can delve a lot of information on that. And we think that you can still do it. Maybe not 3 years, but you can triple over, say, 5 years. All right. So back to Google, you notice that essentially one of the key metrics that we watch and share closely in our classes is the net income to revenue ratio. So you notice, ladies and gentlemen, that very strong businesses over the years, and we're talking about 10 years in this case for Google, actually have strong net income upon revenue margin. That is actually net profit margin. Net profit, now, ladies and gentlemen, not pre-tax, not operating income, okay, of more than 20%. In this case, you can see they are consistently between 21, 25, or 26% over the last 10 years. Okay, now if these strong margins remain together with strong ROIC numbers, with bigger addressable market, you notice that these are stocks that you want to hold forever. Okay, so like what I shared in my article, even though Google has delivered me a 1,000% return since my first investment, I continue to add on to these holdings when there are actually market corrections. So for example, during the pandemic crisis last year, when Google fell from 1,006 to 1,001, I continue to add at 1,002. Okay, and even when the thing recovered, you know, and when we look at the momentum indicators that showed that advertising revenue will be the first to bounce back, you know, and Google is able to deliver 61 billion on a quarterly basis in revenue. We went into even to buy at 1,005. Today's price is at 2,893. Okay, so we like to agree with Warren Buffett that say that the best investments are the ones that you don't need to sell. Okay, that means you can hold forever. So once again, ladies and gentlemen, you can see our latest article, all our latest media interviews, you know, this last month, 2-3 months ago. Okay, when we talk about China REITs, we talk about the fight for logistics assets, you know, so do sign up and become our member, you know, and then we also have REITs for a good cause and our latest publication. All right, so we talk about now, you know, our special gift to you, ladies and gentlemen, is that all you need to do for our Christmas event. Yes, we're going to have a Christmas event on the 18th of December where we will have the CEO of ESR, that's Mr. Adrian Chew, you know, who is a strong, fervent supporter of our book that is actually Making Your Millions in REITs. As well, all you need to do to be able to qualify for a free ticket, you know, is to subscribe, like, and share our YouTube channel, this particular channel, okay? Then email us at tpglobalsg@gmail.com when one of your contact becomes our subscriber. So also send in your contest where we will give you contemporaneous REITs questions, where if you answer correctly, you stand a chance to actually win a ticket for our 18th event. For more details, please look at our Facebook page here. Okay, we're coming on live Facebook page on this Thursday, the 9th of December, 8 p.m. Do tell your friends, you know, do basically like and share, okay, and keep your notification alive, as in basically when we come on live, you will be prompted. Okay, so also do take a look at our book that is actually Making Your Millions in REITs. Okay, you will notice, ladies and gentlemen, that this is a very good book, a very good reference to help you in your REITs discourse. And once again, ladies and gentlemen, if you are ready to sign up for our class on the 5th of March, our next technology class, the details are over here. Yes, you can see, ladies and gentlemen, that the next class is only 5th of March next year because we have a lot of events lined up in January and February. But technology is such a very important segment. Okay, and once again, if you look at the kind of investments that we make, you know, you can see that this is taken from Fraser Centerpoint Trust Annual Report 2019, where I was its top 20 biggest shareholders. Yes, you can see that my 2 million shares was worth almost $5 million. But in my book, I did discuss that I did sell quite a fair bit of it and no longer became a shareholder when the share price went to $3 last year. So right now the share price has gone back down to 230. So that's the kind of investments that we make. You notice, ladies and gentlemen, that we make big investments. Okay, we're not the kacang putih kind of investors. People come to us to attend our classes, right, and make big investments because they know they can multiply and their wealth consistently with us. So do sign up for our classes if that interests you. If not, we'll see you on this Thursday, Facebook Live. Do tell your friends to like and share, and we'll do come in for our YouTube channel once again next week. Once again, to qualify for the free ticket, do subscribe, become a member of our YouTube channel, like and share with your friend, and send us an email at gcpglobalsg when one of your friends sign up with your contact details, and we'll see you. Adios, amigo.